What's up, guys? It's good to be back. I am back from my 2-week vacation from the Caribbean and it was great, but my wife and I both got sick, so I apologize for my voice. It's not quite 100% yet. So I can't believe it's already been 7 months since I last unveiled our RRSP portfolios to you guys. Many of you have been asking where are the updates? Well, the wait is finally over. So in this video, I will be unveiling our updated RRSP portfolios for my wife and I. So I made a lot of changes to them since the last video back in February, including an entire strategy shift to really focus on US listed funds instead of Canadian listed funds. But before I go into that, I just want to remind all of you that our RRSP accounts are completely separate from our main passive income portfolio, which I have been unveiling pretty much every single month on my channel, and where I'm currently on update 8, right? So there won't be an update in September this month for my main passive income portfolio as we were on vacation, but stay tuned for an update in October. So if you're new to the channel or a recent subscriber, I just want to make sure that you guys understand that our RRSP accounts are completely separate from my main passive income portfolio. So the reason is pretty simple. We're not extracting any of the income yet from our RRSP accounts or portfolio. So the income they're generating every single month or every quarter is being reinvested in the portfolio, which is causing kind of like a compound interest effect, right? So the income generated from our main portfolio, however, which is a combination of 4 investing accounts, right? Our 2 TFSA accounts and our 2 regular non-registered cash accounts, is extracted every single month to pay all our living expenses. So this is what we owe our financial independence to, right? Our financial freedom to. So we pay all our expenses with that income, and whatever is left over, we reinvest it to further grow our passive income. So now let's quickly discuss the strategy pivot for our RRSP accounts before I unveil both accounts to you from A to Z and show you how we make a combined 12% annual yield or interest rate in our RRSP. So if you're a long-time follower of this channel, you probably already guessed why we shifted our RRSPs to US listed funds. Many people still do not know this, but the RRSP is a very special account in Canada. It's the only one in Canada, while the Lira as well is included, that is completely immune to the 15% withholding tax on dividends from US listed stocks and funds. So that's right, if you have any stock or fund that's listed on the US stock market, either on the NYSE, the New York Stock Exchange, or the NASDAQ, the dividends that you receive are not subject to 15% withholding tax like if you would hold them in a TFSA or a cash account. Why? Well, it's pretty simple. The RRSP, the Lira, those accounts are considered retirement accounts, right? A retirement's actually in the name. So it's as simple as that, guys. Some treaty was done back a while ago between the US and Canada. I think it was in the 60s. And the treaty says that any US holdings in a Canadian registered retirement account like the RRSP or the Lira is not subject to that 15% withholding tax. So this is actually a pretty big deal, guys. And since the US stock market is bigger and better than the Canadian stock market, in my opinion, it makes complete logical sense to take advantage of this in your RRSP account, right? This is why I always advise my fellow Canadians that when it comes to your RRSP accounts, to really focus on US listed funds instead of Canadian funds. The US, in my opinion, not only has more options in terms of high yield funds designed for income oriented investors like us, but the yields are typically higher than on the Canadian market. So it's really a no-brainer, right? It's a win-win. So of course, in the end, it's completely up to you. You could also do a mix of Canadian and US funds as well, which is what we're doing for Erica's RRSP account, which I'll show you in a second. Another thing I want to mention real quick is that since I'm primarily investing in US listed funds, which give US currency dividends, right? The dividends you get are in American dollars. I hold these funds in a US currency account to avoid that the dividends and distributions are automatically converted to Canadian dollars. So as we all know, the bank's conversion rates are always a bit more expensive. So by holding these funds in a US currency account, you get the dividends every month or every quarter in US dollars. So there's no currency conversion there. The only conversion that's really done is when I deposit money in the US currency account, right? It's only normal because only US currency is allowed in that account. So when I transfer, let's say $800 Canadian in my US listed RRSP account, well, I'll probably get something like $600 US or whatever the bank's conversion rate is. So I do a deposit every 2 months, every 3 months, sometimes every month. So it's really not a big deal. The important thing is getting those dividends in the same currency. So there's no conversion, right? So what do I mean by that? Well, let's say you hold US listed funds in a Canadian currency account. Every month, all the dividends will automatically be converted into Canadian dollars, which is not really a bad thing, but the exchange rate it uses is the bank's exchange rate. So you want to avoid as many exchanges as you can. So that's it in terms of strategy shift and disclaimers. Now let's get to the good stuff. I'll show you both accounts directly from our brokers, where we'll go through each holding one by one. And once that's done, I'll give you a breakdown in my Excel file or in an Excel spreadsheet, which you will be able to download for free on our website, passiveincomeinvesting.ca, so you could see the overall yields of the portfolio. So let's get to it. All right, guys, so this is my RRSP account. As you could see, it's all US listed funds here. We'll go through the account one by one. Once again, this account is a US currency account, right? So whenever usually you open an RRSP account, no matter who you're opening with, whether it's CD or RBC or CIBC, you will usually get two accounts, a Canadian currency account and a US currency account. So all the stuff here is in my US currency account. And as you could see, the account is worth about just under 150,000 US dollars. So let's go through the holdings one by one. I sorted them here to my biggest investment. So that's my book cost, right? Book cost is how much money I put into the fund. Market value is how much it's worth. And then you could actually see if I have any unrealized gains or losses here. So 10 funds total, guys. Fund number one is CLM, the Cornerstone Strategic Value Fund. So I talk about this fund often. For me, it's definitely probably the most highest yielding, one of the most aggressive yielding funds on the US stock market. They have a very aggressive dividend policy where it's reset annually to 21% of NAV, and actually they recently made an announcement that they will continue with the 21% of NAV. So whatever the NAV is at the end of October, apply 21% to that, and that will be the new annual dividend. So I checked recently and it seems like the NAV is about $10 for CLM. So what's 21% of $10? Well, it's about $2.10. So that will be the annual dividend for 2022. $2.10, which is a big jump from the current or this year's annual dividend of $1.92. So for those of you who say that CLM, the dividend keeps going down and down and down, well, next year it's going up, my friend. So that means I'm getting a nice yield boost, which is really, really awesome. So CLM, my number one holding. I do own a little bit of CLM, 20,000 Canadian worth in a cash account as well. That's how much I love it. And this is my RRSP here, and CLM is number one. Number two, shouldn't surprise you here, it's qyld, probably one of my favorite covered call ETFs in the US. It's definitely the most popular. It's definitely the biggest covered call ETF on the US market. As we all know, it covers the NASDAQ 100, right? So you're getting access to all the great technology companies, and they have very aggressive at the money call options written. So you're looking at consistently between 10 or 11% yield on this one. So this one, 20 grand investment as well. Another 20 grand here, a nice chunk in Brookfield Real Assets. So Brookfield is really my go-to, or they're specialized in infrastructure and real estate. There's nobody better than Brookfield when it comes to real assets. So anything to do with infrastructure, real estate is in this fund. There's a lot of fixed income in here, and I'm really taking big advantage because it's probably the best closed-end fund from Brookfield. They have a couple on the Canadian market, but I've actually sold them off. BSO.UN, BGI.UN. I've sold them off because they're trading at big premiums. They were trading at big premiums, which they still are. So in my opinion, RA this is the best Brookfield closed-end fund, and it's on the US market. So of course, I'm going to take advantage of that and put it in my RSP. Another big chunk is OPP, the River North Double Line Strategic, I don't know the full name here, Opportunity Fund. So this one, guys, is really a rising star on the US side for me. I really like it. It focuses a lot on mortgage-backed securities. It has a dividend policy kind of like CLM, but instead of 21%, it's definitely a little bit more normal. It's 12.5%. So every year the dividend is reset, the annual dividend, to 12.5% of the NAV. So right now it's yielding very, very high. It's pretty much at just over 13, which is great. And I think these guys, they recently offered a share offering. That's why the price dipped a bit. I took advantage of it and I added a lot to my position. Next one is RYLD. So this is another covered call ETF in the Global X lineup, along with qyld. So our RYLD focuses on the Russell 2000 index. So it's an index of 2,000 small to medium-sized businesses in America. I like to call it the heart of America. So I got 12,000 here. Then I have 10,000. Now this going to my smaller positions here. 10,000 in River North Opportunity Fund, which is managed entirely by River North. OPP is managed by River North and Double Line. So it's a fund managed by two investment managers, but River North is just managed by Riv, is just managed by River North, but it has the same distribution policy as OPP. So it's reset annually at 12.5% of the NAV. So 12.5%, I can't really argue. And this guy also actually just announced a share offering, so it dipped a bit, which is a really good time to pick it up. So 10 grand here. Now the other positions, these are more, I would consider, well, maybe not HGLB, but SLVO and USOI. So Credit Suisse has a suite of covered call ETNs, which what they do is they sell covered calls on commodities. So SLVO deals with silver. I am down on it significantly right now, 20%, or not that significant. But the crazy thing about SLVO and even USOI, which I'm up a little bit on, is that the yield is absolutely enormous. I think SLVO is about like 18% yield and USOI is about 20% yield. I mean, it's really, really crazy stuff here. Very, very aggressive, and I would say high risk. So I wouldn't suggest putting a lot in here, but hey, a nice 5% here, 6% doesn't really bother me. Then I have ORC here. This is the only fund in here that's really like a single company, you could say. It's a company that invests in mortgage REITs with leverage. So that's what this company does. Very, very high yield. It's been on a big downtrend, which is why I picked it up. I'm not scared with that stuff because I like ORC, because their mission is really to provide a monthly dividend, and they keep providing that monthly dividend even though it fluctuates and it's been on the downtrend. So right now, even with the downtrend, it's giving an absolute enormous 15.5% yield. So once again, SLVO, ORC, USOI, I'm not going to go nuts with this stuff, but 10,000 position is 8,000 here for USOI. I'm pretty comfortable with. HGLB, I made a video on this long ago because it was trading at an enormous discount, and it still is trading at an enormous discount. So I'm up on this one nicely. This one, it has the same style of distribution policy as OPP, RIV, and CLM, where it's reset annually, but it's 8.5%. So it's a little bit more conservative. What I really like about this fund is that it says it was basically designed to be less correlated to the overall stock market. So this is kind of like a safety option, a hedge option, but you're getting a lot of income. And this one also, for 2022, the dividend, just like CLM, is set to go up significantly, and it's still trading at a really, really big discount. And last but not least, USOI. So it's the same thing as SLVO, except instead of covered calls on silver, they do covered calls on oil, basically USO, this fund called USO, which basically holds oil futures. So this is my RRSP, guys, in a nutshell. Very aggressive in terms of income, but that's okay. I have some of my favorite US funds here, like CLM, qyld, RA, OPP, which are really make the bulk of the RRSP. I am considering adding a lot more in RIV as well. I really like this fund. So there you have it. Now let's check out my wife's RRSP real quick, and then we'll go over the overview of both accounts together. So this is Erica's RRSP account, guys. For this, for her account, we decided to go very, very simple. So we only have 6 funds total. So these are the 3 funds in her US currency account. So these are basically really some of my favorite ones. Very, a bit safer, a bit more stable, but really, really high yield. So you got qyld, ryld, and ra. I'm not going to go over them again because I just went over them and discussed them. So for her US currency account, this is what we have here. And you could see the book costs here, the amounts invested. So pretty high up on these 3, which pretty much are, I call them the 3 musketeers, are pretty much my favorite go-to US listed funds, which I consider to be very consistent and very safe over time. So you got the NASDAQ, you got the Russell 2000. So it's like having the whole US stock market, plus you have real estate and infrastructure. So now let me show you what we have in her Canadian currency account, because for her account, for her RSP, we decided to go half US, half Canadian. So let's go into the Canadian ones now. So this is Erica's Canadian currency RRSP account. And as you could see, there's 3 stocks in here. What I like to consider the best of the best on the Canadian stock market that's diversified. So I always want to make sure, it's got to be diversified. I don't want anything really sector specific in Erica's RRSP. We just want something that's diversified so we could set it and forget it, because in her account, for both the Canadian, which you're looking at here, and the US, which you just saw, the drip is turned on. So this is the only account out of all our 6 investing accounts where the drip is turned on, because we just want to set and forget it. So EIT is the biggest, the best closed-end fund in Canada by far, right? The Canoe EIT Income Fund. You guys know well enough that this is my favorite closed-end fund. It's the OG on the Canadian stock market in terms of high yield. Very diversified in terms of sector. It's very heavy on the financials and the energy, but that's just what the Canadian market is. But it has also US and a little bit of international. So it has healthcare as well. It has materials. So really, really great diversification, which is the top priority here. GDV, my favorite split fund of all time. Why? Because it's extremely well diversified in terms of not only sector, but also region. It has US, Europe, Canada, and it has all the sectors. And then the third, last but not least, it's HDIV. So HDIV is probably going to be a rising star in my portfolios going forward. So HDIV is a collection of 7 covered call ETFs, and on top of that, the fund manager or Hamilton uses leverage. So in there you have ZWB, ZWU, so the Canadian banks, utilities, you have technology, which is HTA, you have HHL, which is healthcare, you have gold, you have energy, and you have life insurance. So an amazing fund that's really already diversified, which is the criteria really for this account. So as you can see, guys, 3 of the best Canadian listed diversified funds of all time in Erica's Canadian listed account. So now let's look at the overview in an Excel file so you could see how it looks like altogether. So here is the big overview in a nutshell, guys, in an Excel sheet, which you will be able to download for free on my website. I'll show you that in a second. So essentially here what we put is what the account is worth for both me and Erica, and the total contributions basically of what we've been putting in throughout our entire career, or basically since we were 18 or 19 years old, right? So unfortunately we weren't managing RRSPs back then, but when you transfer over your contributions, we basically still kept them. So as you could see with my account here, I'm yielding about 13.76%, which is very high. Of course, the big ones that really push the yield up is SLVO and USOI. Like I mentioned earlier, these to me are really crazy high yield, but they're a little bit higher risk. They're definitely higher risk, higher reward. So just keep that in mind here. But also things like CLM and basically everything here is over 10% yield. So add it all together, the average is 13.76. So monthly income is about 1655 US a month in income. So for Erica's account here, I'm not calculating the average yield or anything like that, because since this account uses the drip, it's very hard to consistently know what your average yield is. But basically this account is making 1,056 Canadian dollars every month. So together we have about 3109 Canadian. which our two accounts are generating. So give or take, if you add, what the value is and what the monthly and annual income is, you're looking at an average yield of about 12%. That's why I put 12% in the title of this video. So there you have it, guys. Now let me show you where you could download this file on our website. So just as a reference in case you want to download it. So I'm on my website, guys, passiveincomeinvesting.ca. So this is where you could download the RRSP portfolio as well as our main portfolio. So once you're on the homepage, all you have to do is go right here, guys, free tools and resources. Click on that, and this is where you get all the free downloads and resources. So the first one is really my main portfolio. The second one is my report card for my stock picks 1 year later. And the third one is the RRSP portfolio. So right now it's outdated, obviously, because we haven't updated it yet while I'm filming this video here. So you will get the third one here will be an updated copy of the Excel file, which I just showed you. So all you need to do is click on this big red download button. Of course, if you use Firefox like me, it won't work, because if you click on it, this is what you will get. So just make sure you use Chrome or another browser besides Firefox when you're trying to download stuff. And keep in mind, there's also other free downloads and free links in here as well. So there you have it, guys. That is our RSP portfolio updates. Again, completely separate from our main passive income portfolio. So an update on that will be released shortly in October. No update in September as we were on vacation, but don't worry, our intention really is to continue updating you guys monthly on our main portfolio, and maybe for our RSPs every 3 to 6 months or so, because we don't expect many changes in terms of funds. We're just going to keep adding to those funds, right? So numbers don't lie. The biggest views we get on our YouTube channel are the portfolio update videos. So I know you guys really appreciate it because you like the transparency and honesty, and it gives you the confidence to really follow our lead and invest in these types of funds yourself. So we will continue making these videos. Don't you worry. We're all in this together, guys. Our goal is all the same. It's to grow our income stream, right? So stay tuned for further portfolio updates, and of course, more videos on various investing topics. So at the very minimum, guys, our intention is to release a new video every single week on Sunday evening. So stay tuned for the next videos. As usual, guys, please show your appreciation by hitting that like button. It's free for you and helps the channel grow, so it's a win-win. Also, make sure you're subscribed so you don't miss out on our future content, community posts, monthly surveys, updated information on the unit NAVs for split funds. So all that is to get that information, all those community posts and updates, you need to be subscribed. So subscribe to our channel so you don't miss out on those. And of course, visit our website, just like I showed you, passiveincomeinvesting.ca. That's where you could access my digital product, which we recently renamed the Ultimate DIY Investing Package version 2.0. So we renamed it really to get away from just the passive income, because the package is also for growth investors, dividend investors, as well as income investors. So we renamed it, and we're getting ready to release version 3. So that should be out in the next month or so. We're just finalizing it. So make sure to pick up a copy right now, because the price might go up, and by purchasing version 2, you have a free lifetime update. So you will get the next version for free. Also on my website, I offer a one-on-one consultation service with me personally. It's right there on my homepage. We just opened the October calendar, and the appointments were sold out in less than 5 hours. So we're just mind-boggled by this. So we really appreciate your confidence in us. So stay tuned for more consultation slots that will be open in November, as well as any cancellations I get in October. So I'll let you guys know if I have any cancellations via Facebook. So make sure you join our Facebook group. We have a big Facebook group that's growing over, I think it's 3.7K members now. So make sure you join us there for the latest updates, as well as Instagram. You could follow us there as well if you use that social media platform. So of course, once again, guys, thanks again for watching. Make sure you stay safe. Stay tuned for more videos. Take care, and see you next time.